Alright, good afternoon then folks, as we are at the beginning of another week of trading on Monday the 16th of October. Now we had a relatively busy week post CPI. Obviously the lead up the front end of the week obviously included the situation escalating between in the Middle East, should I say, caused some substantial moves across asset classes, which then focus turned to the inflation print out of the US on Thursday of last week. But I see a somewhat choppy week, certainly across FX land. So, a bit of dollar weakness to start the week, then massive dollar strength post CPI across the board. Your Aussie, Kiwi, Euro, Sterling, dollar Swiss, dollar CAD, dollar Yen, all showing dollar strength post CPI. On Friday, those moves somewhat reversed across a number of different currency pairs. We'll come across here. A 10-year yield spiked higher, as well as the 2-year yield spiked higher post CPI. Did give back some of those gains and now is back trading towards the high. This 2-year yield especially looking to push through the that kind of the recent highs there at 5.08, looking like it wants to test up 5.1 and maybe 5.15 at the highs posted back on Friday of 2 weeks ago. Oil, dreadful trading today, not much to be done across the price of oil. Gold giving back some of the gains. So across the board this morning, a bit of a pullback against moves back end of last week or on Friday, but yields look like they want to continue to push higher. Stock indexes, you can see stock indexes across the board at a bit of upside just immediately after the Middle Eastern conflict kind of really kicked off. But then it comes into CPI back end of the week, and there was rallies were sold or aggressive selling on Thursday, popped back higher on Friday and aggressively sold back into on Friday. You are making another attempt higher at the moment, but not really at any great levels to then go looking for breaks through. Any pullbacks kind of in the middle of low man's land at the moment across stock indexes. Your DAX, bit of downside last week post CPI and then into Friday. Euro stocks as well following the same suit, with your FTSE just chopping sideways the majority of last week. Nothing to see there as of yet on the FTSE. In terms of what that means for price action going into this week, pretty undecided as to what way to take assets. You look at, again, the US dollar, pretty choppy and downside last week or upside across the dollar last week, but really just grinding lower in today's session and not really doing too much. It is a Monday though at the end of the day. Yields are the only one with kind of clear direction. I say clear direction over the last hour, but really just chopping sideways the whole day today. Stock indexes slightly higher today, not a massive amount. Again, just a lack of clear direction across major asset classes. Now that probably has something to do with the fact there's no high impact data anywhere in the world today on Monday, or certainly the developed nations, which we would keep an eye on. Coming across the Tuesday into tonight, RBA meeting minutes likely to say the same thing. They haven't hiked interest rates. You're looking at the economic data that does not suggest interest rate hikes. But if inflation is to spike higher, or if the data does warrant it, then they will potentially look at hiking again. But you have to imagine, certainly for now anyway, barring any massive surprises in inflation, the RBA are done. So probably not too much to see there in their minutes. Main focus of attention this week will be sterling. You can see you got labour market figures at 7 a.m. in the morning. Come around to 7 a.m. on Wednesday morning, you have got inflation figures, retail sales then on Friday, and that will give us an indication as to how the Bank of England may look going forward. And you can just read this economic data for what it is. Maybe a bit more tricky with the FTSE, certainly with sterling. I mean, the unemployment rate ticks higher, should be negative for sterling, as it kind of solidifies the fact that they may not hike interest rates again. Interest rates are a little bit up in the air in the UK, so we can look at the data with some intent. Unemployment rate higher, negative for the currency. Unemployment rate lower, positive for the currency. Doesn't take a genius to figure that out. Again, inflation is the same thing. Inflation pulls down, there's lack of a need, or less of a need for them to hike interest rates again. But if inflation ticks higher again, maybe there's more work to do for them. Retail sales, consensus is for a negative print in terms of retail sales. Consumer spending expected to tick lower over the month of September. Again, if that misses consensus or still beats consensus and it's around zero, doesn't really mean too much, to be perfectly honest with you. You're going to have to back inflation and the unemployment rate or the labour market figures out of the UK, and they will be the main focuses of attention. Canada struggling to get inflation down anywhere below that 4%. If you have a look, you see across here, We see a 4% print from last month, struggling to get it back below 4% expected for consensus again. Now, if that does tick higher again, you got inflation going to 2.8 to 3.3 to 4, right? If that comes up above 4%, up to 4.2 or something, that uptrend in inflation continues, and the central bank will have to look at that and potentially maybe not do anything in terms of it, but they'll have to come and talk a good game at some point and say, look, inflation's rising again, we may need to hike interest rates again, therefore the Canadian dollar may strengthen on a beat above 4%. So something I would keep an eye on if you are a Canadian dollar trader would be the price of the Canadian dollar in tomorrow's trading session. Chinese figures likely to affect global markets. GDP year over year in Q3 4.4%, so down from previous at 6.3, so negative growth expected. I say negative growth, but still it's not technically what you consider negative growth, but negative figures from the previous month. And another miss on consensus will be more of a story of pain for the Chinese economy. So let's see how that plays out tomorrow, on Wednesday, should I say. Industrial production and retail sales to come on Wednesday morning. You got a speech from Jerome Powell on Thursday at 5 o'clock. Let's have a see what he has to say for himself on Thursday. What that means for asset classes going forward, they're a little bit undecided as to what way they want to go. US dollar trend is still higher long term. If you have a look, has had a bit of a pullback from the highs, but has accelerated again. People will look at that as a potential head and shoulders, but I'd choose not to look at those things until it gets down towards the neckline. So for now, dollar index still firmly in that uptrend. You would have to say bias probably still tilted higher on the dollar, especially if these yields manage to keep pushing through the highs. A little break or an intraday high posted on the 10-year yield. It'll be interesting to see how price reacts off this 4.72 level. 2-year yield through these highs posted on Thursday and then in this morning session already. So they're making another attempt higher. That is positive for the dollar, or should be positive for the dollar. That should be negative for stocks. So imagine if they keep going, something has to give. Let's keep an eye on those yields and see how markets play out going forward into this week. But cable will be a focus. Sterling in general will be a focus. But a relatively quiet economic calendar. So we'll await fresh headlines on the Middle Eastern conflict. We'll keep an eye on UK assets over the course of this week. And if those yields continue higher in the US, positive dollars and negative stocks may be a decent way to play it.